Consumer inflation rising once again in September, according to a new report from the Labor Department, but not as much as economists expected, and that sent stocks higher today. National correspondent Atra Al-Nashar has a closer look at the numbers and what it means for the Federal Reserve's next interest rate decision coming next week.
Inflation climbing higher in September as the cost of necessities like food and energy pinch American wallets. The 12-month inflation rate now back up to 3%, the highest since January, but better than the 3.1% that was expected. Fastest rising expenses last month included beef, airfare, and gas, which has since dropped.
We're getting to the point where we may hit a terminal rate of inflation where it isn't rising anymore early in 2026. But it doesn't mean that even if inflation starts going down, that's still just the rate of change. It does not mean that price levels will go down.
The Federal Reserve's target inflation rate is 2%. And even though September's inflation rate came in an entire point higher, when the Fed meets next week, they're still expected to cut interest rates to loosen up the economy because they're starting to see the weakening job market as a bigger threat to the economy than rising prices.
There really isn't a risk-free path now since it appears that inflation is continuing. What's so challenging about this is that both supply and demand in the labor market have come down so sharply, so quickly.
When it comes to how Americans feel about the economy, sentiment has also fallen sharply over the past year, according to the University of Michigan's closely watched surveys of consumers. Its consumer sentiment index dipped again slightly last month, in part due to people having lower expectations for their personal finances.
If we're thinking about sentiment only, inflation is not the only factor. The labor market is very poor. Hiring is very slow. Young people are struggling to get jobs.
Because of the government shutdown, the flow of economic reports is upended, leaving policymakers and observers guessing about the true state of the economy. September's inflation report is critical, allowing Social Security to move forward with their cost of living adjustment for 2026, announcing Friday that beneficiaries will see a 2.8% increase, just shy of the current rate of inflation. In Washington, I'm Atra Al-Nashar reporting.